Good afternoon, ladies and gentlemen. In this video, I'm going to talk about distribution, spotting fake liquidity, and potentially spotting a rug pull coming. In the top left for this example, I've got the GRE order book, which will be the focus for today. And in the top middle, I have the 1 minute chart for GRE, which I'll expand a little bit later, but I've also got the volume bars down there. So keep in mind, guys, my cursor is going to be moving around quite a bit. Please disregard this as I was recording this real time as it was happening, and unfortunately I was not recording my microphone at the same time. So instead, I'll be highlighting the key things that I'm talking about with red rectangles like this. Let's start with what distribution actually is. I guess a good summary would be if a holder or a group of holders hold a large amount of shares and they want to sell gradually in order to maximize their profit because they don't want to spook other traders and investors. I guess a good example here would be if someone had 1 million shares, right? It's not the best idea to sell all 1 million shares all on market because then you'll be wiping out 33 cents, 32.5, 32, 31.5, all the way down to 30 cents. And that way, you'll be missing out on potentially 10% profit there by just selling everything all at once. And it'll just really ruin the price action. So the idea of distribution is to sell small chunks at a time. And we can really see this on the order book happening in real time with order reloads. So what we're going to see soon is people reloading the offer or the ask in the order book and doing it with roughly 50 to 100,000 shares and doing it repeatedly. Whereas you'll notice that these sellers aren't hitting the bid, they're just reloading the offer. And that way, they take advantage of the strength to the upside and distributing to other traders and investors their position. So distribution in itself is perfectly fine in the mid-cap and large-cap space. It's a perfectly legitimate thing to do. However, in the micro-cap space, a lot of the times distribution comes along with fake liquidity, and with fake liquidity, it leads into what's called a rug pull. This is where liquidity, the fake liquidity is sitting on the bid of a stock, encouraging other people to lift the offer. So in this example at the moment, we've got liquidity at 33 cents on the bid. A lot of it's fake. And that's encouraging other buyers to hit 33.5 to move the stock upwards. So when this happens enough and when the distribution ends, what happens is the fake liquidity gets pulled because the seller no longer needs to have that liquidity there. So they pull the liquidity and then the share price just tanks. People start panic selling because they see that all of a sudden the bids aren't real. So there's no genuine strength and support in holding the stock up. We're going to see this a little bit later. So let's take a look at the early potential warning signs of distribution. This candle at 11:06 in the morning is perfectly fine. We actually like that candle. It's breaking out into new highs and it's done on high volumes. However, you can see on the following candles that it's sort of leveled out at 33 on high volumes. One can imply here, without looking at the order book in real time, that there may have been either one large wall at 33 on the sell side, or the sell side kept getting reloaded with high volumes. And since I don't have recording of the order book, you'll just have to trust me that this was actually a level of reloading that was occurring. And I started this recording because I saw the early signs of distribution happening and I wanted to catch a rug pull in real time. And that's what we're going to see. For this part of the video, I've sped it up 1200% so the order book can get to the point where I can show you guys what happens when this 33 level on the bid gets sold into. So it's starting to get hit now, just briefly, and it's playing back at 1x speed now. So pay real close attention to this bid at 133. 100k will get pulled, and there it goes. Now, this encourages sellers to come in, or some sellers that saw the liquidity get pulled. And when 33 gets wiped, there's an instant show of strength, right? This is the fake liquidity. We got 50k on the offer, it gets instantly taken, and 200k stacked on the bid. So what that does is basically, instead of wiping 33, the whole 100K. The algorithm or the person who has that order in pulls the 100K, entices sellers to come in, and then it demonstrates a show of strength. And you can see what happens. They basically committed 50,000 shares out of the whole 100K plus 200K on top, right? So there's a demonstration of about 350,000 shares worth of strength, but only 50,000 was actually executed. If you replay the order book, you can see the 100K got pulled. It didn't actually get executed. No one sold into it. And that's just one demonstration of order book manipulation when distribution is occurring. If there was legitimate strength in buying, the bids wouldn't just be stacked with 250K shares. They'd be fighting over each other to get the shares, and they'd be jumping the bids and hitting the offers. But you can see, and I'm currently running this at 1200% speed, by the way, so we can see the full order book, but we can see how the demand on the bid doesn't translate to the ask or the offer. Instead, the person selling is just selling out maybe 10, 20, 30, maybe 50,000 shares on the ask while they stack the bid with strength in order to encourage other people to lift the offer, to take their position out. And if they do get hit on the bid, then that's just the cost of business. So I'm going to be running this at 1x speed in a second, and we're going to see the impact of the fake liquidity. So it's running at 1x speed now, and pay attention to the bids. Pay attention to 33 cents and 33.5. 33 will get pulled first, and then there it is. All the orders gone, and 33.5 gone, and the stock just crumbles. We'll see how far it drops. I believe it gets to about 31.5. Now keep in mind how long it took to push this stock from 31.5 to 34.5. It took about 45 to 50 minutes to grind all that way. And look at the volumes that were churned to get from 32 to 34.5. And now look what happened when the fake liquidity got pulled. That entire range from 32 to 34.5 is gone in a blink. It was probably sold into in the space of about 10-15 seconds, if that. And that happened when the liquidity was pulled. So this is the impact of a rug pull. So guys, those are the basics behind how I identify fake liquidity and rug pulls in the microcap space. Do keep in mind there's always the potential for real liquidity to flow in along with the fake liquidity and really launch a stock. It doesn't happen very often, but for those really good fundamental news announcements, it can happen. And I'd also say that roughly 90% of the time, or at least 90% of the time, when I identify rug pulls on the market, that tends to be the top of the stock, and it almost never recovers. The other 10% of the times where it retests the highs or even breaks into new highs is usually due to a really, really strong fundamental reason, so a news catalyst typically. So guys, that's it. I'm going to run the rest of this video at 1200% speed so you guys can see what happened with the stock and with the order book if you so wish. Alright guys, I'll catch you in the next video. Cheers.